Fellas, you know Degree Cool Rush deodorant, right? Well, last year they changed the formula, and guys were mad about it. One dude even started a petition. So guess what? Degree heard us, admitted they messed up, and brought the original Cool Rush scent back exactly how it was. And it's in Walmart, Target, and other stores now for under $4. So grab some and remember why its cool, crisp, and fresh scent made it the #1 men's antiperspirant for the last decade. Degree Cool Rush is back, and it smells like victory for all of us.
Reality radio for a really great future. We're talking real money.
Whether you like dealing with it or not, it's essential. You're just required to be able to deal with money. You have to. And if you want to enjoy a great future, you not only have to learn how to deal with money, but you need to learn how to invest that money and to do it in such a way that the odds are now in your favor as opposed to the industry's favor. And for too long, the industry has made a lot of money. You haven't always. So we want to help you manage your money better, find better ways to spend it, save it, and particularly invest it. And you can get the help you need with a little teeny tiny phone call on Saturdays to us live between 3 and 5 Eastern, noon to 2 Pacific at 855-935-8255. You're on Talking Real Money. I'm Don McDonald. Over there, I can only see his mouth on the screen for some reason. I don't know what's wrong with your tilt there. Oh, now I can see all the aircraft. Oh, much better now. There's Tom Cock, ladies and gentlemen. Don't you love it?
I got a question for you. Have you gone anywhere and purchased anything where they've now added a processing fee or a I love these names. They come up with delivery and setup. They got all kinds of names that companies are now using to add cost because of inflation.
Yeah, and in fact, car dealers have been adding additional dealer markup. And I think both Ford and GM told their dealers that
knock it off.
MSRP is the highest price you can charge, guys.
Yeah, I know.
Or you're going to get fewer cars.
The Labor Department says, inflation up 7.5% in January compared to the same month a year earlier. That's the biggest rise since February 1982.
Now, again, let's make this really clear. That is a 7.5%. If the January rate was identical over the next 12 months, that would annualize at 7.5% per year.
That's right. Okay. I'm not here to get in an argument about how much inflation there really is.
It's just that when people hear that, they say January's inflation was 7.5%. Some people think, oh my God, it's 100% a year.
True. But here's the thing: I am raise the alarm bells for. So while you're paying more, let's just be honest with her. Inflation is always here. It seems to be higher today than it has been the previous period of time. Higher, yeah. Okay, we can say that. On the other hand,
there's another hand. You must be an economist.
The other hand, I got them both out now. You listeners have somewhere around $18 trillion in the bank. 18 trillion. And here's the number I think you should pay attention. The average rate on a savings account at the largest banks, 0.06. 0.06. Now, that's not my grade point average from ninth grade. 0.06. High yield savings account, 0.5. That's the average. And guess what? There's more good news when it comes to your friendly banks. They've already said they won't raise rates. They won't keep in tandem with whatever the Federal Reserve does. That's not anything new.
Why should they?
Right, they don't have
They're
to.
not having any problem bringing in assets because you want that total safety. That's what you're saying. When you leave your money in the bank, you're saying, I want total safety, and you're forgetting what that 7.5 annualized inflation is doing to that money earning. Okay, let's round it. Can we round it to zero?
Round it down to 0.
Can we just round it to zero?
Yeah, I mean it's inefficient. It shows poor custodianship on your part, but at the end of the day, what it really shows is you're not paying attention. I think a lot of people just end up saving money randomly. Oh, I got that there. I see this regularly.
No, I think it's habit. I think it's habit.
No, it just drives me crazy because then you become a FOBOA, right? Friend of Bank of America. I mean, there is absolutely no reason to have a lot of cash sitting around. Thank you. There's no reason to have all this sitting around. Your money should be, if you have an emergency fund, okay, but everything else, should be, in my mind, stocks, bonds, real estate, something that is growing, not something that
has the potential to make some money.
Yeah.
Oh,
something.
and speaking of inflation, have you gotten your Treasury I bonds for the year yet?
No, I have not.
I got mine.
I think it's a gimmick. I know. I think it's a gimmick.
It's 10th. Okay, if somebody said, "Hey Tom, I'll give you 7% on your $10,000 right now," would you say no?
I have very little in bonds anyway.
But you have
most
some.
of my money's in stock. Most of my money's in stock.
I thought you said you were a 70-30 guy.
80-20.
Okay, so out of your money, you still have many thousands of dollars in fixed income.
Yeah, I could do it.
You should buy one. I bought mine. It's
just talked to someone today that
went
out and got them because you said to.
So. 7.1. I got 7.1 for this quarter.
What if you need the money? What's the? I forget the rules.
That's not. I don't. This is not money I need. I can
get. But if
I can get everything out in 5 years with all the interest. I can get everything out after a year with a loss of 3 months interest. So we're
losing track.
Liquid.
Don't waste your money sitting in savings account.
Right.
Or
go get some
accounts.
I-bonds. And I got a better idea later I'm going to share with you, too. It's really cool. 855-935-TALK's our number.
Tom and Don are talking real money.
Is your portfolio a mess? You may have a case of hodgepodgeitis, but don't worry, we can help. Just set up a free, no-obligation meeting with a Vestory advisor at Vestory.com. No sales pitch, guaranteed. That's Vestory.com.
Your guides to a really great financial future. Tom and Don are talking real money.
Oh, my gosh. My daughter, my daughter, 27, beautiful young woman.
That she is.
Went to a We the Kings concert last night.
I don't know them.
She does. They love them. Right. And for the first time in her young adult life, she crowd surfed.
Yeah, I think that's a good thing in the middle of COVID. Sure, why not?
Yeah, exactly.
That makes sense. Is she on quarantine for the next?
No. Actually, she 2 weeks ago she had COVID. 3 weeks ago.
Oh, great, good. Let's make sure she takes it to those people.
She brought it to the concert.
Lovely.
Everybody there had to show their vaccination card at least.
It's Florida, right? Okay,
Thank you. Mm-hmm. Yeah. I know.
Leaving it.
I know. I got to move just because if I don't move, you will harass me for the rest of my natural life.
And you will have it coming, my friend.
855-935-TALK is our phone number. I'm Don. That's Tom. We talk real money with you, and we're going to talk
before we go to the calls, real quick.
I was on a roll.
You were very good. I just want people to think about: are you part of the 30 million Americans that are gambling on the Super Bowl, $7.5 billion, or hopefully it's a different group, the people that have $18 trillion in savings accounts that are paying nothing? Decide which group you're in.
They can afford, with that much money, they can afford to gamble $7 billion.
Whatever it is. Crazy. I can't figure it out. Not for the life of me.
Good luck figuring people out. Come on.
Not that smart.
We've been trying to figure ourselves out. I mean, if Sophocles and Socrates and and everybody,
bring on the
Those
hemlock.
guys, Dante, they couldn't figure us out. What do you think? You're going to be able to? 855-935-TALK. Give us a call, and let me see. Oh, yeah, Martin is up next. Hi, Martin. Welcome to the program.
Thank you, guys. Hey, first, I want to say to you, I think advertising on Clark Howard was part of the best thing you did, so congratulations.
Thank you.
Thank you. Done. Thank you.
So,
it did. It actually helped our numbers quite a bit. It really did.
Yes, it did.
I've noticed. I've listened to you guys before Clark Howard and continued. So I'm late to the investing game. I have about 15 more years to work. I'm in education. I have a terrible 403B. My school district won't change, so I have about 180, and the split is I'm with VALIC, AIG.
Oh!
You do have it bad, my friend. I feel a strange pickling coming on right now as you say that.
Can I do here? Let me try and help just real quick, Martin. I know VALIC is very aggressive. I mean, they show up at meetings and things, right?
Yes. That's
have you asked the school board if they have a list of approved investments for their 403B? Because I have multiple times seen and heard from people who have gone to their school district and the school district gave them this list and they didn't even know that they had Fidelity or Vanguard because Fidelity and Vanguard don't come to your school to try to sign you up.
Wow. Okay. Well, I guess since I'm already in and I have about 180, but I have it split between 4 small cap values, stock index fund, large cap growth, and a growth
Wait,
fund.
with
Is that
Valak?
Okay.
No, he's got small.
Yes.
He has divide between 4 funds: small, large.
Is this in the 403B?
Yes, correct.
Yes.
I thought it was with
Yes.
Valak.
It is. Yes, the mutual fund. Yes.
They offer funds.
In a variable. Okay. All right. Okay.
Yes. So also, I like that past 2 weeks you've always asked that question: what do you want to do with your money? What's the purpose? So my purpose, since I will have a pension, I want this money to replace at least 30% of my salary, which would be maybe $45 a year. I have a Roth IRA. Both my wife and I have one. Projected maybe to have 400 when we retire in 15 years. So if I have this 200 right now in Valak, and I'm expected to have 400 in the Roth IRA, anything else I need to do with this Valak, because I have an additional 500 I can put in a month. So should I change what I'm doing? Any recommendations?
Okay.
Yeah, here'd be my recommendation. So I would not. You could have an after-tax account where you put that other 500 in. That's probably what I would do, because you could go buy very inexpensive index funds that would be a lot cheaper than what Valak has to offer in your 403B.
As a matter of fact, let me give you an example. The Valak small cap index has an expense ratio of 0.42, which is high for an index fund.
Okay.
But again, back to your situation, because if you're trying to replace $45,000 a year, you need somewhere around $1 million in those other outside accounts, including the retirement account, Roth, et cetera. So I would take that other $500 a month. I would throw it at a post-tax regular brokerage kind of account. Use 1 or 2 very inexpensive index funds and get on with your life.
Or actually use 1 or 2 very inexpensive index ETFs, because you'll have you won't have distributed capital gains.
Good point.
Which can be a big help. So yeah, I'm with Tom. I think that's the way to go. And still, even though you're in index funds, which is great, and I'm so proud of you for doing that, when there's so many bad funds that Valak can offer, I would still suggest that you look and see who else is offered from your school board down the road, because you can move it over. You're not going to. It'll be inside the 401k. You're not going to have any our 403b. You're not going to have any tax issues. So I would look into that. Thanks for the call. We appreciate it, Martin. And Steve, you're next. Welcome to Talking Real Money.
Yeah, thanks for the welcome. Appreciate it. So my problem is pretty simple. I just sold an investment property. It was a residential residential rental house, and I'm gonna walk away with about $2 million that I need to find something to do with. I have plans for the $2 million a year from now. I want to build a house, like a retirement type home. It's actually in Mexico. And in the meantime, what can I do with this money besides having it sit around? And
you're going to put $2 million into a house in Mexico? The full 2?
Into it.
Wow.
What part of Mexico, just out of curiosity?
Cabo. So it's a luxury.
When you say
home.
retirement home,
Trying to get a little.
Yeah, when you say retirement home, I think of a place we could put Don, but I guess it's not that.
Not that kind of.
So you're saying kind of where can I park the money for a year that will make some money? Well, that's always the $64,000 question.
In this
because
case,
here's
the
what
$2 million question.
Yeah. Okay. So here's what you face. Another one. I have for many, many decades said just buy the Vanguard short-term investment grade bond fund. But recently somebody wrote me and said, wait a minute, that fund is down 3%. You told me that was like a safe bond fund.
Yep.
Well, it is pretty much safe, but it has some volatility. So you face volatility there. That's one. Number two,
a loss of 3% on $2 million. Right. That's not jump
That adds
change.
up. Yeah. Or you go put it in a high yield savings account, divide it up. I would, because the 250 shot, right, for security purposes. But there you're only getting 0.5%.
I have a better place.
Please.
It is 100% safe because it's 100% in treasuries. It matures at the end of 2022. The yield to maturity is 0.75%. The symbol is IBTB. It's from iShares. It's the iBond 2022 ETF. It matures at the end of 2022. So if you hold it to maturity, you lose nothing.
Tom and Don are talking real money.
At some point, most investors need professional financial guidance. So get a little bit of free help or a lifetime of affordable 100% fiduciary guidance at Vestory.com, Vestory.com.
For your real life and real future, Tom and Don are talking real money.
Wow. If his second house is going to be worth $2 million, I can't imagine what his first house looks like. Wait a minute. I bet that wasn't Steve. I bet that was, it's probably Steve Ballmer or something.
It was Steve Ballmer.
Yeah,
I didn't
Steve
want
Ballmer,
to say it,
yeah.
but yeah, he owns a basketball team, some other stuff.
Maybe.
So,
Because,
yeah, $2 million.
Wow. $2 million
I
would
just
be
hope,
chump
by the
change.
way,
for me,
for that
never happen ever in my
no,
life.
that's not going to
Never.
happen. And by the way, I hope for that great advice which you just gave him,
Yeah.
which is pretty interesting place for something like that we could at least merit an invite of some kind. Drop by.
Oh, the Cabo House?
Yeah.
Well, yeah.
Hello.
I mean, come on. I'm getting him more than a
Yeah.
big high yield CD. 0.75%. By the way, the symbol again
today's
is
world.
IBTB. And if you're interested in these, I just want to talk a little bit about these because I
Wait
am
a minute.
so.
I want to make sure you got it right. I is in India.
B.
B is in Bravo.
Boy. Bravo. T is in
T is in Tango.
Tom. B is in
And
baby boy.
Bravo.
Okay. There you go.
Okay. Just want to make sure. Okay. That's the ticker. So you
anyway,
type that in, you find it.
these are very, very cool. A listener brought these to my attention a few weeks ago. Invesco has some, but they're ridiculously expensive. They're just stupid.
Well, you'd want to pay a lot for something that's yielding 0.75, of course, sure.
Yeah, and these are like I think we're 4 basis points.
Yeah, we looked it up. It was 4.
It was really low. These are from iShares. They're called the iBond ETFs, and these are you can get them in a corporate, a municipal, or a treasury. There's also high yield. And don't touch those.
What are the different rates between the three?
The municipal for a single
gonna be a
year
little less.
is about 40 basis points.
Because you get the tax thing. Yeah. Okay.
The corporate was almost about 1 last I looked.
It's going to be more. Sure.
Yeah, but here's what I literally I just put in a sell order for my short-term bond fund at Schwab, and I am going to go
Because
in on
it's
Monday.
gone down?
Well, no, I'm going to take the tax write-off, not because I did some calculations, and I figured I am not going to start needing any of my fixed income money until like maybe 2024. So what I'm going to do is create a ladder, a 24, 25, 26, 27, 28 ladder with these ETFs, because if you hold them to maturity, they will mature at their full face value.
Well, wait a minute. What's going on in 24? You're going to need money.
Well, I'm saying I won't need it any earlier than 24. I'm going to
okay.
keep.
I thought you were like
I'm
quitting
gonna,
or something.
I know I'm going to keep working for sure till 24. But then 24 is and when it matures, if I don't need it, I roll it back out to 29.
Wait, if you're quitting in 24, I'm quitting
I
in
didn't
24.
say I was quitting. I said
That's what it sounds like.
I
It sounds
don't-
like that Tom Brady thing. Like, no, he didn't really retire. Oh, yeah, he did retire.
I don't want to. I mean, I know I'm going to be working at least through the end of 23.
We'll have it out. People don't know. I'm going to Florida here in a few weeks. We will have this out, sir.
Oh, Lord, no. It's going to be a miserable experience now. You can't come
Florida.
to
What
Florida.
can
You're
you
not
say?
allowed. I don't care if it's the biggest soccer game of the millennia.
Pretty close. Pretty
It
close.
is
And we're
not.
taking you. It's
I know.
huge.
I know.
Huge.
Tori volunteered to go. 855-935-TALK is our phone number. And B, you're next. Welcome to Talking Real Money.
Hi, Don, please don't quit. Please.
I'm not quitting.
Oh, we're starting
Tom,
a campaign
Tom,
now. I like that.
Tom, what did you see what you did? You started nasty rumors.
You started
Blame
on your
him.
Hanging up the microphone. Yeah.
Anyway, what's up?
I have a question about a non-qualified, fully taxable brokerage account with Schwab. And I'm in mutual funds right now, and I just got the tax statement and went, ouch. What can I put this money into instead?
Tell me what you got.
I used your 3-fund recommendations online for Schwab, and that doesn't work very well for a taxable account.
Well, no, because
Just out of curiosity,
because of
what was- how
realized
much-
capital gains.
Yeah, what were the gains on it? Just or not?
No, it's
That's
all right.
fine.
It's all right.
You don't
what
give
you
that out.
what you
about 22,000, and the gain was like $1,100. I was like, I can't believe that.
Yeah, here's what I would suggest you do. Is go ahead. I don't know if Schwab will do it, but I know that Vanguard will swap those for their ETFs with no tax hit. But at Schwab, I doubt that. But I would still, since given the amount you have, swap them into their ETFs because in the future you won't get realized capital gains.
Tom and Don are talking real money.
A second opinion could save your life either physically or fiscally. Let one of our Vestory advisors help you save your future at Vestory.com, Vestory.com.
Reality radio for a really great future. We're talking real money.
Got a financial question? Want a decent answer? You want a bad answer? Call the other talk shows. You want a decent answer? Call us, 855-935-TALK, 855-935-8255.
I'm really feeling bad bringing up the fact. Don has agreed to stay on. He will stay here. He doesn't say how long. No, he didn't say how long. And part two is if you don't want him on, I'm going to start a letter writing campaign to get you thrown off. So send us your letters, your cards. We'll start a campaign to see if we can get him off the show.
I knew his mean-spiritedness would just grow worse through the show today. I just knew it. And he thinks I give him a hard time. Listen, all of you, you're witnesses. You listen to those of you who listen to the show regularly, like those of you who call and go, I've been listening to you since 1942. You know that I've never, ever tried to kick Tom off the show, right?
That's true.
You
never have.
Do you think Tom's behavior is a little extreme? Give us a call, 855-935-TALK, 855-935-8255. I know you'll stand up for me. Take him down. Come on, you can do it. I have faith in you.
Let's wait. No, we're not going to do anything until we get a positive call for you. Okay.
No.
Jeopardy theme or something?
No, we are not waiting around. We have people who need
It
help.
could be a long time. That's
we
all.
have people who need. Now, see,
okay.
That was mean-spirited again.
Hey, look, it's my daughter's 14th birthday on Monday. That cuts
all right.
me some
At your
slack
age,
or something.
at your age,
Yeah.
to have a 14-year-old daughter. Okay, I totally get it. That's
And
why
if I was ever going to get COVID, last night was the night because we had like 9 of her friends over or something. So, wow.
Yeah. All right.
Anyway.
We are moving along to a question that came in from
Chances I won't be here on Monday. So. Okay.
Well, the funny thing is that you see, if I just reach over here
A whole pile of them?
to this little button right here to my right, that just totally shuts Tom off the show. It's just gone completely. But do I do that? No, because I'm a nice person. Unlike some people who will remain nameless, but are mean-spirited.
Give me a question.
Here's a question.
See if I can be nicer. Yeah.
You won't be with this one. No.
no.
There's no chance you're going to be nice.
All right.
No, there's no chance. No,
Okay.
it's going to get worse from here, folks.
All
Here we
these
go.
people are calling now because they want to say well wishes.
All right,
for
here's
you.
the question. So they're getting rid of me. So I'm invested in Robinhood, have been since the drop of the IPO, and I want to know if I should buy more during the dip, hold what I've got, or sell.
Sell.
There you
Next
go.
question.
All right, there we go.
Don't own individual stocks, especially those risky, silly. I guess that never was a meme stock. It was a meme trading platform. But
Yeah, it's a meme. It's a meme in a meme in a meme. It's sort of meme-ish. It makes me a little
think that's
squeamish
one of the ones-
that it's so meme-ish.
I think that's one of the ones that could go bye-bye, frankly.
It's worth $11.5
Yeah,
billion
here's the thing. Here's
right
the
now.
thing. You know, they're already probing the way they make most of their money, this order flow business. If they tell them you can't line it up the way they've been doing it and making the big buy, that might be it. I don't know. We'll see. They don't charge you to trade. So.
We're not so good. Okay. 855-935-TALK is our phone number. The calls are pouring in as we speak. Pouring in.
We don't know if they're supportive or
We don't
against
know.
you,
We're going
though.
to find out, though. We're going to start with David and find out whose side David's on. David, welcome to the show.
Hey, I'm on both you guys' sides. You guys are great.
Dang it. Talk about
Well done,
diversifying your portfolio. Splitting it right down the middle.
I see a future for David in politics somewhere. I'm on both sides. Okay.
Yeah.
Do you have anything else,
Yeah.
or is that all you wanted to do? Is just make me
No, that's
mad?
it.
No.
That's it.
Okay.
Thanks. That's it. Thanks.
Thanks, David.
No, anyway,
Thanks for
you
your
guys
vote.
have a great personalities. Yeah, I'm just kidding.
Yeah.
So
see, there it is.
I actually
What?
kind of dropped the ball. I called in a couple weeks ago and asked you your recommendations for REITs. There was one you had off the top of your head, and there was another one you looked up. It might have been more of an international one. So I wondered if you could throw those my way again. I'm actually recording it this time before I recorded it with the microphone off.
Well, I'm betting the international one was AVRE, the Avantis Real Estate International Real Estate Fund.
And then
I think
Vanguard's
that
got
rings a
their
bell.
VGSIX.
VT?
That's just U.S. though. VG.
VT? VG?
VG.
Do your lettery thing. Do your lettery thing, Tom.
V is in Victor. G is in golf. 6.
Okay.
But that may be the one where they're going to restrict you as how much you can trade. I
Yeah,
can't remember
and
if there was a few of those
VNQ, what
funds.
you should do is do VNQ.
Yeah, buy the exchange
VNQ,
traded
if you
fund
want
for-
the
yeah.
U.S., VNQ is the exchange, very
The
exchange traded
estranged.
fund.
The estranged Don McDonald. We got it. Yeah.
Thanks,
How do you
David.
guys vet these? How do you figure out what's best and not?
We do a lot of reading and research, tons. I spend probably 10 hours a week on Morningstar, looking things up, reading about them, looking at what's in their portfolios, expense ratios, amount of diversification, taxes, volatility, all that stuff. Thanks for the call.
Tom and Don are talking real money.
Tom and I created Vestory to help everyone become a better investor, even those who will never be clients. Let one of our advisors help you start your financial plan or solve a money problem free with no obligation or high-pressure sales pitch at Vestory.com, Vestory.com.
Your guides to a really great financial future. Tom and Don are talking real money.
Time remains for your important questions, comments, opinions, thoughts on money matters of all kinds here on Talking Real Money. I'm Don. That's Tom. We are at loggerheads, but we'll work it out. Robert, you're next. Welcome to the program.
Yes, enjoy your program. Thank you.
Thank you, Robert.
I have a question. I am 76 years old, but doing okay. I have some money in various areas, but I wondered for some of it, I have been not maybe as wise as I'd want to be, having some for safe money aside from some of the investments. What would you say might be a low expense ratio ETF or something that I could keep into a value fund that might be reasonably safe?
No, when you say safe and then you say value fund, value stocks, of course, are risky.
I look at value fund as a category that's usually a little more conservative, but
Okay.
that's why I said safe.
So, okay, let's step back. Let's just take a step backward and go over this word safety again. You have what percentage of your portfolio, how much money are we talking about that you want to keep safe, and what do you consider to be safe?
Well, I know that the bank situation, like you said, is almost a laugh. So this is money that it's probably $150,000 that I wanted to just be a little more safe.
And where is it now?
Right now, it's in a savings, I hate to say.
Okay, all right. Because we get this question a lot because people are dissatisfied with the low rates they're getting at their banks, but the reality is it's what rates are like. And anything that's going to be a lot more than that, every time you make more money, you take more risk.
Yeah, no, I understand.
For example, I could get you an ETF that goes out a year, the one I talked about earlier, the IBTB, that yields 0.75 to maturity. You'd have to leave it alone for a year. If you take it out earlier, you could get less. You see, you don't know, because if you sell it early and rates go up, you could get less money. So that's the risk there. If you went into a short intermediate term bond fund, you would probably make a little over 1% a year. But the risk is it can decline in value. My short-term bond fund declined in the last year or so by about 3.5%.
Yeah.
So it's a
you
trade-off.
mentioned earlier about the I bond 7%. Could you maybe talk about that again?
That's only good for $10,000 a year.
Okay, well, I could do that.
And that you do through Treasury Direct. Now, here's the risk of that, though. That is not liquid money. You cannot get your hands on it in the first year at all. And for the first 5 years, you're going to sacrifice 3 months of interest if you want to take it out. After 5 years, you get it all. That is done through Treasury Direct, treasurydirect.gov, and you set up an account, and then you put $10,000 in, and you buy an I bond, an inflation-protected savings bond, up to $10,000, which will take care of 10, but you got to take care of the other. And that's why we often suggest, for simplicity's sake, short-term bond funds. But remember, when you go up to get that extra fraction of a point yield, you now take on some risk that your principal value could decline.
You take that on in terms of both what's going on with rates, but also if you own corporate bonds, you take that on in terms of, well, what happens if the Fed raises rates and a recession comes along and some of those companies cannot pay back their bonds. So there's a potential of principal decline there. So it's minor, it's small. These are really the best companies, but it does exist. I mean, so that's always the trade-off, Robert. There isn't one right answer in any of this.
Yeah, and that's the problem. Yeah. There isn't a great answer where we could just say, oh, do this. There are better answers, but better answers have dark sides to them.
Right, I understand. And so one other last question. When I was working for a large company, I was given, I'm not given, I accumulated some stock over the years. I don't mention the name of the company, but so I have that stock, and down the road, what's a good way to kind of start to sell it? It's gone up and down, but mostly up. As I get older, I'm going to have to either just leave it there for my heirs or start selling some of it, I guess.
I think the best time to start selling it, or gift it. Yeah, you can gift
charities.
You can gift it if you don't need it. If you need it, you want to leave it to your heirs. You could leave all of that appreciation there and leave it to them. But if this is money you might want to use at some point, then what I would do is do some tax planned selling, a little each year.
Yeah, so I don't raise my.
So you don't raise your bracket.
I want to sell a huge chunk of it, maybe a little bit once a year. Huh?
Right, correct, sir. Yep. Yep. That's the way I do it.
Okay.
Okay.
Okay. Well, thank you very much for your input. I enjoyed the show.
Thank you, sir.
Thank you. And by the way, individual stock is a great way to gift to charities because they love that. They take the stock, they sell it, they get the money, and they don't face any tax ramification. So it's terrific for you and for them, frankly. So,
or if you give it to your heirs, you get a step up.
Yeah, in today's tax situation, yes, you get a step up.
You do for now, anyway. Yeah,
today. Yeah, it's been discussed to get rid of it, but
one more
gone. I guess
talking real money question before we have to take a break. Tom, Don, love your podcast. That's what they said. They said that. I didn't say that. About 3 years ago, my wife and I bought a house for her parents to live in. Only my wife and I are on the deed. We paid cash. My in-laws' rent consists of paying us only the amount of real estate taxes and insurance. We pay all the upkeep expenses, such as a new air conditioner and other repairs and improvements, so we are by no means making any money from this arrangement. We knew that going in. We bought it to save them money on their housing expenses. My question is whether my wife and I should form a corporation or take any other actions to try to get tax benefits we can get, either now, such as depreciation, or when we sell it, to minimize the tax. What do you think?
Well, here's one issue you run into, because I've run into it in my situation. When families are involved, it gets trickier. In other words, there's no sort of arm's length here. This is like our family, and we're charging them less. Why are you charging? So it gets harder from that tax write-off situation. I would go, if I had a tax preparer, I would go see that preparer and say, hey, is there anything we can do if forming a corporation might be, whatever it is, LLC, and maybe reasons to have it in an LLC anyway, just to protect you in case something bad
exactly.
happens.
That's what I was thinking, is that an LLC it protects you from lawsuits,
liability,
from liability. Only the house is at risk that is owned by the LLC. As for the tax thing, Tom's right. You got to be real careful because then if you start to file returns and your in-laws are getting what the IRS considers to be free rent, well, now they might be liable for a whole bunch of income taxes that they haven't paid. So tread carefully. Get a great tax preparer. Pay them what they cost. They're worth it. And get their advice, but tell them every detail of your situation. You're going to need to buy an hour or so of their time. And you might want to, once you build this LLC, you probably need them anyway.
I was just funning you. I want you to stay on the show.
No,
Come
too late
on.
now.
For at least another couple minutes?
No, I'm leaving right now. No.
Okay.
I'm sorry. I'm just tired of being treated this way. Tired. I'm just tired.
Tom and Don are talking real money.
Is your portfolio a mess? You may have a case of hodgepodgeitis, but don't worry, we can help. Just set up a free, no-obligation meeting with a Vestory advisor at Vestory.com. No sales pitch, guaranteed. That's Vestory.com.
For your real life and real future, Tom and Don are talking real money.
No, gosh, I'm feeling awful. Don's been my partner for all these years, and he just walked off because he was unhappy with how he was treated.
All right, hold on. No, I'm back. I can't leave them with just you.
Well, that's fair. Okay,
I'm committed to the audience, and so I'm going to stay here because if it was just you, I'd worry.
When I hear Don and committed in the same sentence, I do get a bit nervous, but still, okay.
All right, yeah, all right. You want help? You want some advice from a real life fiduciary advisor, but you don't necessarily want to hire one right now. That's okay. We help everybody at Vestory. We do. All you need to do is go to Vestory.com, Vestory.com, and set up an appointment with one of our advisors. They will help. They like to help. It's not a sales-oriented organization. Of course, we have clients, but we don't push people. We don't need to. So go to Vestory.com, set up an appointment. That's Vestory.com.
We hope you realize that the information provided on Talking Real Money is for informational, educational, and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately and consistently predict the future, so past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Appella Capital, a fee-only registered investment advisor. Thanks for listening, and please visit TalkingRealMoney.com for more information and disclosures. Are we done now?